Hello and welcome to NIAGA Spotlight with me, Tamina Kausji. NIAGA Spotlight takes us to the week in economic analysis and future affairs. So basically on this week, we are spotlighting a very recent issue, which was the protests in Indonesia and how it actually impacted markets and sent a little bit of a shockwave across ASEAN. Now, of course, in late August, Indonesia's largest unrest in years erupted over lawmakers' 50 million rupiah monthly housing allowance, about 10 times Jakarta's minimum wage. Now, within days, at least 5 people were killed, 1,240 detained, and losses hit an estimated 50 billion rupiah. Markets also blinked in response. The Jakarta Composite Index slid about 2%. The rupiah weakened by 0.9%, and the Bank of Indonesia did have to intervene. On NIAGA Spotlight today, we break down how street anger translated into a market shock, what it means for Malaysia's trade supply chains and investor confidence, and whether or not ASEAN's, Southeast Asia's largest economy, can steady the ship over the last quarter of 2025. Joining me online now is Yohanes Sulaiman, who's Associate Professor with Universitas Jenderal Achmad Yani, UNJANI, Cimahi, Indonesia, and he's also a non-resident fellow at the National Bureau of Asian Research, Seattle, Washington, USA. A very good morning to you, Yohanes. Thank you so much for making time to join us. How are you this morning?
Fine, thank you, and thank you very much for inviting me. My pleasure to be here.
Absolutely. Yohanes, let's dive straight into the topic at hand, beginning with a look at elite privilege and how that can lead to legitimacy risk as well as market risks. Now, to frame the entire issue, the protests, of course, were triggered by lawmakers' 50 million rupiah per month monthly housing allowance, widely framed as being roughly 10 times or so Jakarta's minimum wage. Now, this perhaps serves as an emblem of elite detachment during a cost of living squeeze. Let's go beyond the outrage, Yohanes, and look at how visible privilege can also corrode the state-society compact.
Well, as you mentioned, the allowance, the 50 million allowance is basically what the sword that brings the camel back. In addition, that the parliamentarians also behave badly. One of parliamentarians basically openly said that those who criticize the allowance are stupid. Actually, it is like worse than stupid. He said it was goblok, which is like a very, very
we understand that term in Malaysia as well, very well. Exactly. And of course, with the fact that parliamentary sessions globally, not just in Indonesia, Malaysia, are broadcast online, then of course the sentiment spreads about the insensitivity, right?
Yes. And of course, the fact that just a month before, a couple of regency in Indonesia got shocking news that their tax was increased, their property tax was increased by 1,000%, was causing uproar. Like, hey, we are getting taxed to death here, but you got an increase in allowance, and then you behave ostentatiously. They are wearing all those luxuries, and then going over the place like Paris, London, and whatever. I mean, they were like basically out of touch.
Absolutely. So being this out of touch also, aside from corroding the state-society compact, let's look at how it also then goes forward in raising governance risk premia and also some volatility in equities, FX, even across ASEAN, considering, of course, the size of Indonesia's economy.
Well, we actually got a new Minister of Finance, and he was replacing Sri Yani, who was already expressed her desire to retire several times already, and forcefully earlier last week when her house was torched down, was looted by looters, and then she basically said that, look, I'm through, I'm done with this. And of course, the new ministers come in and saying that, oh yeah, I'm going to bring the Indonesian stock market to index to 36,000, and then I'm going to settle all these economic problems in 3 months. And honestly, I prefer somebody who's just not talk much but get things done. I agree that you need to to calm the market down. Like you said, I mean, all these unrest creating problems. The ASEAN economy is in turmoil because Indonesia is big, but you are not creating calmness. You are not exuding calmness by saying outrageous thing. I mean, it makes people think that you are not also in touch, and that's problematic.
Exactly. It may give the impression about looking at the credibility risk then, because replacing a minister does not mean instantly that trust can be rebuilt back. So the removal, of course, of Finance Minister Sri Mulyani and, of course, replacement with Probaya Yudi Sadewa, it once again jolt markets for a while. Yohanes, does sidelining such high credibility technocrats signal policy loosening that lifts growth, or perhaps it's a sort of a interim credibility discount that does actually raise interim funding costs as well as FX risk?
It is both. I mean, if you are loosening spending and then you basically like throwing money to the system, the problem is, are you throwing it just for the sake of creating growth, or because there is something fundamental that really needs more circulation in the society? I mean, we are here as a problem because the credibility problem itself feeds to this entire thing. Like, if the government really show that they are prudent with money, they are not wasting money, and then they are printing money, then people say, yeah, they must have something to do with it. But the problem is, if the Minister of Finance himself is not having that much credibility, and then the government also does not really spending, but just print money. The question is how to pay them, and then you will end up with countries like Zimbabwe, where the inflation rate was very high, and it will hurt the market. So I'm very worried about the current situation.
Absolutely, because it clearly becomes, it behooves a question about if growth targets are chasing, let's say, an 8%, but institutions weaken in the meanwhile, it's not necessarily that you will have faster GDP or even slower investment. Thanks very much for the perspectives insofar, Yohanes. Let's move on into digging deeper into the structured dissent as a negotiation technology or tactic. Now, the protesters during the earlier days, they consolidated around the 17+8 demands, time-bound asks from police accountability to economic relief, which actually turned the street anger into a negotiating framework. Some of your thoughts observing this unfold?
Well, again, like you mentioned earlier, and I completely agree, we are talking about credibility here. And the question is whether the government is actually listening to people. I mean, they just say that, yeah, we will accept the demands. But the problem is whether they will do the demands. Because it is far different than just listening and considering versus just do what expected, what asked. And what happened is that the governments say that they are going to look at what one of the demands, which is the asset seizure proposal, but the law itself is very imperfect. There are concerns that the police can just use the law to seize people's property based just on suspicions. Like, let's say I'm a police and I tell that you are committing crime. And of course, the question is, you will ask back, like, okay, where's the proof? But the police just say, no, I'm taking your property first. Then we can talk about proof. That's how the law is at this current draft. And the problem is, if they don't fix the weaknesses, if they don't fix the draft here, and then just like publish it and pass it in the parliament, and it will just create more uncertainties, more chaos, and more problems. So again, and then also for many people, again, the question is, can I trust the government, or are they just saying that they are listening and then they do their own things, which is very problematic. And again, the Minister of Finance also said, okay, those 17+8 demands are just from like a small segment of our society. Once the economy going back, then they will stay silent. I mean, it's already showing that they don't take this seriously. And that's worrying.
Exactly, and perhaps it points towards an assumption that this episodic unrest can move towards bargaining. But do you feel that markets, on the other hand, are ready for these so-called policy for peace swaps? And let's say if another episodic unrest were to break out, do you feel it would take that perhaps to move towards more concrete structural measures and changes in laws which are currently rolling out, as you described, in a very unjust manner?
At this point, I think the market is still wait and see. I mean, the index has been recovered, but it is mostly from the domestic investment because companies are looking at their own stock that are very cheap, and they are starting to buy back their companies, and that creates the increase in the index. But overall, I think what we still have here that the market is still discounting it, although they are not yet in the panic area, but still, in my opinion, it is very concerning because the market, I don't think that the market really trusts this new, the government will do what it says. I mean, if the market really trusts the government, I think you will see the index just skyrocketed, maybe like 8,000 or 9,000, I don't know. I just making up numbers there. But because it just recovered slightly, so I don't really think that it shows any trust. And not to mention the fact that they are also concerned whether the government is publishing the number, truthfully, because remember in the last quarter the government declared that we have 5.2% economic growth, and many people say that look, it's just bunk. They just massage the number. It is not a real number. So basically, it's like the title of book say, lies and lies and statistics.
Yes, why the statistical figures may not necessarily reflect the economic reality, especially of the masses. Yohanes, thank you for the insights. And so far, we take a short break now. We'll be right back with NIAGA Spotlight and Yohanes Sulaiman sharing with us more perspectives on protests and markets and Indonesia's ASEAN Shockwave. Welcome back, still with me, Tamina Kausji, and today on NIAGA Spotlight, we're taking a deep dive into looking at protests and markets and, of course, Indonesia's shockwave across ASEAN. Yohanes Sulaiman joins me online to continue the discussion. Yohanes, now let's zoom in on how the road tragedy evolved into wider economic risk. So to frame it, of course, back on the 28th of August, Afan Kurniawan, 21 years old only, a delivery rider, was killed by a police armored vehicle near Indonesia's parliament, which is what was the spark for igniting nationwide anger. Now, in the aftermath, of course, close to 1,500 plus arrests, about 55 billion rupiah in damages have also been reported. The Jakarta Composite Index commensurately dropped over 2.2%. The rupiah has weakened about 0.9%, and Bank of Indonesia also did intervene. So even TikTok Live was temporarily suspended as solidarity orders surged for gig riders. So let's discuss, in your perspective, how one act of state violence, amplified then by the power of gig platforms, transforms a protest into, firstly, logistics paralysis. And that is what actually occurred in the immediate aftermath.
Well, I mean, if you look at the killing of Afan Kurniawan, you have to put it in the context. I mean, earlier we already mentioned about the parliamentarian ostentatious living, that people just pissed off with them. Now you also had here another element, which is the police brutality. People look at at the video of what happened, like this police tactical vehicle was speeding really, really fast in the middle of crowd and just hit him, and rather than stopping to rescue him, just hit him again. Like, I mean, and people even now look at this. I mean, like the parliamentary arrogance, the minister out of touch, and then police brutality, and bam, you get a very, very volatile mix. And not to, I mean, nobody was surprised that the protest erupted bigger the next day, and besides the fact that the president spoke in front of national TV saying that, okay, I mean, we regret the killing and when we regret the death, and then please calm down. Nobody's listening to him because everybody saw that even his speech didn't really address the root of the problem. He keeps saying that there was outside interference. So again, what people look at here is out of touch government. So I mean, so that's why the protest there exploded, and then and 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 of course now it's died down because, like we said, the government seems to say that they're going to give concession. They already fired several of the parliamentarians. Actually, the proper word is inactive. They are putting those parliamentarians in inactive positions. So they're basically throwing a bone to the protesters. But the problem is what happened in the long run. If the minister of finance here, the new guy, doesn't really show the result, and then by the next year, the economy is going bad again because of the budget problem. I mean, one of the biggest component was very expensive programs, and you cannot fund it out of nowhere. You have to get the money somewhere, and I think there will be more economic crisis next year.
And even perhaps before next year occurs, there is also the possibility that what we're looking at really is going to be capital flight and exacerbated risk. But I'd like to zoom in quickly on, of course, the populist headlines versus the household realities. Now, after the U-turn on perks, the government, of course, leaned on some symbolic populism means. Example, the free meals, while inflation and living cost stress persisted. And how do such optics fail to reset household expectations? And in your thoughts, what mix of perhaps targeted transfers or any credible reforms would actually help to stabilize sentiments and also markets, perhaps during this immediate last quarter of 2025, Yohanes, before we even have to wait for the next year to come and perhaps for conditions to worsen? Let's talk about what targeted actions the government of the day could take now.
Well, the problem is if you want to give a targeted subsidies, like payment money to the poor, again, the question is where's the money? Because the freelance, the cooperative already taken a huge chunk of the budget. It's already by next year, the freelance program already ate like 10% of the entire budget. And of course, to get all the money for the freelance program, and other programs, they are cutting back on the government expenses. And the government expenses, in many cases, are actually the stimulus to the economy. And then when you say that, okay, more targeted approach to the poor people, then again, the question is where's the money? Because the money is already gone. And I think, like you said, there was a capital flight. Why? Because the investors look at the numbers and they don't like it. And now the Minister of Finance is saying that, yeah, I'm going to throw more money to the system. Hopefully it will goes better. But I think unless the government start cutting back on the program, such as the freelance program, I'm not sure economic will go better. I hope I'm wrong. I hope sincerely that I am wrong here. But unless the government cut all those spendings, then there's no way things will go better in the near future, because investors don't like what happened today.
Fair points over there. And also perhaps as an observation, some earlier tightening and budget reallocations also did stoke resentment in education and health. Then, of course, that led up to the August spark, which lit it. So How should perhaps the market, meaning other countries, neighboring Malaysia included, and around ASEAN, read austerity in Indonesia and observe it as a potential vulnerability that might also convert quickly into market shocks? And are there perhaps any early fiscal signs which we should be watching out for collectively?
That's a good question. I mean, when we talk about austerity, to be honest, I like austerity. I think the government need to cut spending. But the problem is, for what? Are you going to cut the spending in order to create a far more efficient government? Or is the money going to another wasteful program? So I'm not saying that austerity is all bad. Sometimes you need austerity when the state expenses are already way too big, and then creating a lot of graft, corruption, and whatever else. So, and the problem is that's not what happened here. It is austerity to fund highly inefficient, highly wasteful, and unclear whether it has any benefit to the program of the program. And that's a problem here. So what other countries should look, in my opinion, then first is whether the government is going to double down on this. They already increased the number for the freelance next year. And the question is, of course, it will overrun. I mean, they already targeted for a lot of money for this year, and they already used all the money by June. And then I saw the budget, and I don't think that the budget for the freelance is realistic because it just costs a lot of money. So that's what I think investors should look at, whether the government is actually increasing the fiscal discipline, whether the government was saying that they are doing what the market said, but actually adding more waste. And to be honest, I don't see at this point there is a nice trajectory that the Minister of Finance say, yeah, I'm going to throw money, but the problem is I don't know how it will increase the economic growth.
Very true indeed. Yes, so much to ponder on, and also perhaps looking at the design whereby which it is rolled out, right? Because cutting social buffers is indeed like perhaps shorting your own domestic stability. It might look like it's cheap or affordable upfront, but costly in spreads a little bit later. I think you make some really distinct points there, which I hope the appropriate policymakers are heeding attention to. It isn't just about wider financial figures and numbers, but whether discerning that the grassroots, wider populations are actually able to not only live hand to mouth, but perhaps have a little bit of buffer to have some dignity in their daily lives. Thank you, Yohanes, for the insights insofar. Let's look at the fact that moving along and turning out the conversation, Indonesia is also Malaysia's largest ASEAN's trading partner. So perhaps there may also be the opportunity for further unrest in the near future. What type of security level indicators should Malaysian firms track or look for as leading signals for maybe supply chain related stress?
Okay. At this point, what the market should look is whether the government is pursuing more taxes in the sense like, okay, when I say that more taxes, that means that the government really needs money at this point. The government want to get more money, but the problem is they don't know how. Well, aside of more taxes to the firms. So I think what really will disturb is now is when the government keep trying to raise more taxes from the already stressed businesses in Indonesia, then it will lead to more business closure, and that will create, as you know, more blockades. And then more unemployment, and then when the government starts cracking down on the students, on the protesters, there were already warnings about that the government may impose civil, civil emergency to handle the protester. But I think that's actually a bad policy because it's kind of showing the government that they are basically close the door to compromise.
Mm.
So if I were businesses, I would look at what the government is going to do now. I mean, what
That's
kind of policies?
And perhaps the next month cycle will be what is truly crucial to tell us what the trajectory is going to be until the end of the year. Yohanes, thank you so very much for your deep and very thoughtful insights indeed. It's been an absolute pleasure having you on the show.
My pleasure to be here. Thank you for inviting me.
Not at all. Well, that's all we have time for today. But before we close out, Indonesia's unrest is, of course, a regional risk story as well. And over the next quarter, 3 signals might be perhaps the most important to look at. Rupiah stability, if the US dollar versus the Indonesian rupiah pushes past, say, 16,500, capital flight risk does indeed rise. Policy credibility and also watching fiscal moves after Sri Mulyani's exit were for real reform versus empty populism, to reiterate what Yohanes shared with us. And of course, logistics disruptions. This could be looking at port slowdowns, transport closures, and this might signal supply chain stress for Malaysia. Indonesia's path will indeed shape ASEAN's markets, and these are a couple of your early warning signs. I'm Tamina Kausji signing off for now. We'll see you again next week with more economic analysis and insights. Here's to a productive week ahead.